Hello and welcome to the stock specific class here for Thursday, March the 10th. Again, if you have any questions during the week, or if I don't get to your questions during class, make sure you send those to jerry@traderspro.com. Now, I pointed out a couple key areas on Tuesday. Hopefully you were paying attention to those. Because and I'll review them again today in class, but I talked about how, we wanted to wait until we see a little bit more buying strength before we start jumping in. And I kind of pointed out a key resistance area. We wanted to be above that resistance area. Well, we ran right up to it yesterday. It looked like a big up day, and everyone was excited yesterday with what happened. We ran up to that area, and then we stopped right there. So we still haven't been able to clear it. We're back down again. And so we've kind of had this well-defined range, and we'll look at that range, like I said, here in just a second. And we want to wait. We want to wait until we see it break one way or the other. If it continues to break lower, let the market continue to pull back. We're still just sitting in cash in the portfolio, waiting until, we have that higher probability that we bottomed out. I keep talking about waiting for that fear to kind of mark the bottom. And some of the reason why I keep bringing it up too is there's always new people to join in, but it's also to just keep reminding us that, we really don't have the conditions that you normally see at a bottom. Not that you can't have a short-term bottom that takes place. You could rally here for a couple months and then have another big sell-off. That can always happen. But when that does happen, when we finally get that fear sell-off, then we're going to have a lot more confidence getting in. Not only getting in these positions, but being able to just wait, not worrying about. Maybe we got in a little bit earlier, or maybe the market bounces back and forth, because, you don't always have it's impossible really to predict the day of a bottom. You could get a big fearful sell-off and maybe start buying some stocks or know that you're near a bottom, and then, you could rally a little bit and then go back and forth. You can move sideways a little bit, or even have a move down even a little bit further. So we're not trying to pick the bottom. And when I talk about these things, it's not to try to pick the exact bottom to the day, but to just recognize the conditions when you're close to the bottom. And with the way things have been going, as much as we pull back from the top here, it just doesn't feel we're not that far away from a bottom. I would be willing to say we've had some sell-offs that have created some fear. The VIX has been above 30 for the last several days, which is usually it doesn't stay above 30 that long unless the market's really concerned. So I think we're getting closer to it, but we'd want to see those more extreme conditions before we start to get more confident that we're there. Now, one of the things you could use and to kind of gauge this is these direction alerts. We talked about this on Tuesday, but on momentum here, we're definitely in a more bearish trend. The market's a more bearish trend. The momentum is down here in the sell range, but we're not in the extreme range over here. This would be extremely oversold. It's gone down too far too fast. And you'd like to see it on the right side of here's the midpoint of that. Now, let me just see if I draw a little bit better line here. Here's the midpoint. You'd like to see it be in this area right here. It doesn't have to get all the way to the far left side. I don't know if it does. That's even a bonus. You're really creating some fear in the market. But you'd want to see it kind of in that range here. So there's still some room for that to drop to get there. Same with the breadth. You're oversold, but not extremely oversold to where you'd expect to see, or where you're really close. Obviously, sentiment, you're not likely to get a sentiment indicator into that extreme of fear just because it's been so high for even with some of these. During this whole pullback in the market, I think we moved into just barely moved into trending. I think at one point, but the complacency has been really high. Now, this is another signal, though, of why I still haven't bought into believing we're at the bottom yet. Is there's still that buy the dip mentality. We saw it yesterday. There was the drop the day before, and then you had this sudden big rally, one of the biggest rally days in the NASDAQ, I think it was, in several months. That tells you that buy the dip mentality is still there. Now, these rallies keep rolling over and dropping, and so what's happening is, and I'll show you this when we look at the chart, is it's chipping away to where, and we're starting to see it already here, to where there's now people, instead of buying the dip, they're selling the rally. They're shorting the rally, at least if they know how to short stocks, or they're just not buying the dip. They're afraid to buy the dip. They've now been burned, 3 times in a row or so, 3 or 4 times in a row, and so so the sellers are definitely starting to get control there. So on the sentiment indicator, I'm not expecting it to get, all the way over here to extreme. I'd like to see it at least get to the left side of this trending box, or maybe even into the red, showing at least there is some fear that's now entered into the market. And by the way, this could happen very quickly. That sentiment shift could when it does shift to fear, when the goes from complacency to fear, this needle can move pretty quickly, even though it hasn't moved much. It's been in this range and hasn't moved much for a long time. When it really fear spikes, it can move this direction to the left here pretty quick. But those would be things from the direction alerts that I'd be looking for. There's another sentiment indicator here that you could look at, and it shows you down here, if it gets down, as you get a big spike in fear and it dips down below this green line right here, that tells you you're oversold, really oversold, extremely oversold. And by the way, we have reached that a few times, but these have been little bounces in the market that have taken place. They haven't been real long rallies. So again, we still need to look at the chart as well, along with these indicators, and that's why we don't just look at one thing and say, well, now we know what the market's going to do. These are all, again, little clues that we're going to analyze, and you know what? If it feels like the class is the same stuff week after week, I'm telling you, your trading routine is going to be like that. All I'm trying to do is kind of teach you how to create a trading routine, and if you got that routine down and it's boring to sit and listen to me talk for an hour, then you probably are at the point where you don't need me anymore, and that's good. Now you can just go that routine yourself, but your routine is going to be boring. I mean, you're looking at the same stuff every day, and it's giving you input as to what the market is looking like, and then you can make your trading decisions based off of that. But I know it's exciting to learn new things, and there are things that I can talk about in these classes that are new, and that's one of the reasons why when we do these live charts, we're doing it during market hours. Sometimes there are things that come up that I can teach you. We did this on Tuesday a little bit, where I'll teach you something that I'll notice. It may not be something that I would include in a class if I were to teach a course or something like that, but it's based off of 25 years of experience, and I'll point it out. So there are little tidbits that you can learn each class from time to time. But if it seems like it's a boring routine that we're going through, well, that's what you got to get that routine down, and you got to make sure you're knowing how to read those clues so that you can be more effective in your trading decisions. And hopefully you're doing that. Hopefully you're working on that. All right. So, and another thing I wanted to point out was, again, the buy-sell ratios of the entire market, they're down below, well, they're almost down below 0.5. So it's just not a good condition to be getting into a lot of trades. Now, I am going to go through some stocks today because that's the point of the class. But as I talked about on Tuesday as well, I really wouldn't recommend getting into a lot of new trades here because of the fact that we probably have a little bit further to drop. But I get it. I get it that some of you are, you at least like to have some trade ideas to look at or consider. And some of these are stocks that are trending up right now, despite the market sell-off. And so it's not like that you couldn't make money with some of those. You just wouldn't want to load up your portfolio right here in these conditions. All right, let's take a look at the S&P. I'll try not to spend too much time on this because you could, if you missed it, you could always go back on Tuesday and review that, where I spent a little more time on it because that was the market update class. Excuse me. All right, so the area I was pointing out was right in through here. And this extends out even further. There's support back over in here, but there's support here. And I said we want to see us get back above this area, really close above that area before you want to get a little bit more bullish. That'd be kind of a minimum to get above here. You'd like to actually get above here to really have a little more confidence, because that would give you a higher low. That would have given you a higher low right there, and then a higher high. It would have been acting more like an uptrend at that time, at that moment. Well, you can see here on Tuesday, again, the market opened. We had the big down day on Monday. The market opened about where it closed on Monday. Started to sell, or actually, it started to rally first. It started to rally all the way back up, and again, it stopped right at that resistance area. We talk about support is like a floor, resistance is like a ceiling. And if you can visualize that, it helps you understand why we look at these areas. In this case, this area right here, back here, it was a floor. It was acting like a floor. Every time the stock pulled back to this spot, it would rally off of it. But now, as it broke through, when it broke through this area, and actually it broke above it right into here, but we're back below that area again now. Now it's acting like a ceiling. So Tuesday, it rallied up to that point, stopped, reversed, came all the way back down, and we closed near the lows of the day. Now, by the way, I think I talked about this a little bit on Tuesday. I thought for sure we were going to get a gap down or another move lower on that close. Again, especially that we were trading so far into this candle right here. And this is another significant candle that we want to pay attention to, because what this showed me yesterday is that the buyers that got in down here, I think, were some of the same ones that pushed things up yesterday, because it happened right in the same area. This day it gapped down, and within a few minutes, before you could even blink, it was trading right up in here. So the fact that it stopped right here and then rallied off of that the next day, it makes me believe that there was, and again, it's not necessarily one person that's doing this. I don't want to imply that, but whatever group of traders were willing to buy right there seemed to be the same ones that were pushing things up into here. But the buying wasn't enough to move higher. We did trade a little above that area right there, but look where we closed. We closed right at it, and you can see that if you want to make it even more simple, you just look at this candle right here. This is what's we've been stuck in for the whole week. Again, we couldn't get above that close on Tuesday. We couldn't close above it yesterday, and then today we opened lower. Now today, so far, this is an indecision candle, meaning it could go either way, and that would make sense because we're right in the middle of this range. It could go either way right here, and I would not try to predict a direction tomorrow. Now there are times where I'm pretty confident I know what's going to happen the next day, although as you can see, I thought there was a very high chance on Wednesday we were going to open lower. By the way, we closed on Tuesday, but but there are days like this where it's like you get a move down, a big move up, and another move down, and you're an indecision candle like this. It's a coin flip. It can go either way. So as a trader, I don't want to do anything on a day like today, because if I make a decision, I'm pretty much guessing. And I'm not saying you can't do anything. And there can be individual stocks that look like they have a very high probability of going up the next day or going down the next day. And so, I could do a trade or two, but, when I'm talking about doing a lot of trades or getting aggressive, and again, whether I'm trading the upside or the downside, I trade in both directions. Usually to the downside more with options, because shorting stocks is a little bit risky, a little bit more risk than I like to take. But I don't like to feel like I'm guessing or flipping a coin, and that's what I feel like today. Is I had some trades that I got into yesterday, and I just got out of them today just because I could take a small loss on them, and I don't know where we're going. I didn't want to be short the market. I don't want to be long the market. I'm just going to stay put. And I think that this candle marks perfectly, what you need to pay attention to. If we can break out above that and close above that, and again, you could start to buy. I wouldn't still be aggressive, but you could start to buy right here. And then you get above this high right here, you can buy some more. That would give you that higher high. If it holds right here, this low holds, that gives you a higher low. We don't know if it's going to hold, because I tell you what, if we get down below this area right here, all these buyers that were real strong buyers right here are now going to be aggressive sellers, because they're going to realize they're wrong, and it took a lot of buying to reverse the market right here, so they are going to be panic sellers at that point, and that could create the panic that we're kind of looking for, expecting, and we'll see. But that's the key area. We got to pay attention to that area right there. Pay attention to that candle from that day. If you don't like to draw trend lines, and just pay attention to that candle. That's going to give us the best clue as to when we can recognize that things might be shifting a little bit. There's a question here: how to use Traders Pro for shorting the market? It's not designed to be. Traders Pro is not designed to be a bearish trading instrument to short the market or anything like that. It's designed specifically for finding the bull market somewhere. It's scanning everything to look for what sectors are moving up, what stocks are moving up. Now, I'm not saying you can't use it to short. If you know how to recognize some of these chart patterns, and you know how to short. But it's not designed, and it's definitely not designed for trading options. Although you can use it to trade options, it's a trend software. It's a trend identifying software, and that's what its strengths are. And but you can have another charting service that you use more for recognizing those chart. Well, I teach you the chart patterns and things. I'll talk about them all the time, and I'll talk about, hey, this looks like it's going lower. This looks bearish. This looks bullish, and things like that. And it does have some bearish scans in the muscle stock scans, but like I said, it's not really designed for that. So I think there's probably better approaches if you're going to be shorting the market. Then again, the whole approach here is it's trying to find a bull market to trade, and there are some out there. I mean, and that's why some of the stocks we'll go over today, they're trending up. It's a sector that's moving strongly to the upside, but what I talk about in these updates a lot of times is that part of the reason why we go through this whole process is not that we can't find a trade, but are we in a condition where we want to do a lot of trades, we want to be aggressive, or are we in a condition where we want to be mostly in cash? And obviously, based on what I've been analyzing for the last few weeks even, is that we want to be in cash. And it's boring, and it kind of sucks that you have to kind of wait. But hopefully it's teaching you that not only what to look for to recognize those conditions, but to remember to be patient. You got to be patient sometimes. You'll get killed if you get aggressive at the wrong time, and then typically the people that get aggressive at the wrong time and aren't patient, they're also the ones that don't follow a trading plan, so they don't have stop losses, or so they end up holding all these stocks that went from $50 down to $10, and they're patient because they have to be. They're waiting for the next 10 years for them to go back to $50 again, right? And some of you are probably in this class because that's how you've been trading for the last several years, and you know exactly what I'm talking about. We got to reverse some of that. We got to learn some skills that can help us keep from buying high and selling low. What seems like happens to a lot of us out there sometimes. All right, so again, that's going to be the key area to keep an eye on. The other indexes are pretty. St. Dow has rallied pretty strongly off of its gap down this morning, but again, it's just we're still just stuck in that range. We need to kind of break out of that range. The Qs, all these are basically following the chart of the S&P. I don't want to make this a full market update, but there are some things to kind of go over from Tuesday's update. Bonds, the bond yields have continued to go higher, so bonds have continued to drop. They're still in this downtrend, and so we have gone to a lower low now today. So it's this was that bearish ABC pattern. It just took a little bit of time. I thought it was going to start to move lower on this big down day right here. It had a little bit of a head fake where it rallied back up, and then there's your impulsive move down to go to a lower low. But it's still acting like a downtrend, so we're going to assume that bond yields are going to continue to move up, which would make sense in an inflationary environment that would continue to move in that direction. And gold and oil, the commodities versus the dollar, they're still moving in the same direction, which does concern me. They shouldn't be moving inversely. When commodities and the dollar are moving this strong to the upside, it usually is something that happens before a recession. So it was kind of nice to see a big pullback yesterday in both the oil and the dollar, but it may just be temporary. And if it continues to trend higher, then that's not looking good as far as the economy is concerned. So that's one of those bullish trends you don't want to necessarily see, because it can lead to more damage to a lot of other stocks. But another thing is, when you get a parabolic move like this, you don't want to buy into that. Very often when it's done going up, it tends to come down just as fast. And you saw how sharply oil moved lower yesterday. This is the gold chart right here, but here's oil, one of the biggest drops it's had for several months. It can come down, it's down again today. It can come down just as fast. So, and if you remember in the portfolio, oil was going, it was going parabolic. I got out, and I got out a little bit early. I think I got out, can't remember what day I got out. I got one of these 2 days I got out, and I just went to cash. Wait, this was Monday, so I think it was Friday. So I think it was this day right here. I think I got out Friday. I can't remember now. Was it take it out Friday or Monday. I'll have to go back and look. But anyway, I got out early, but it was going parabolic. I knew that this could happen, where those gains could reverse and very sharply. And so, from a risk reward standpoint, trying to get that extra dollar out of the trade wasn't worth giving back $2 or $3 if it dropped so fast, and you got to think about that when you get a stock that's going straight up. Just understand that when it's going straight up, when it's done, it's going to come down sharply. So again, unless you can feel like you can pick the exact day, and that was a reversal day. I mean, that candle was a reversal candle, but you don't always get a reversal candle. I've seen days where it's like this, and then the next day it has a big down day. You never got a warning. It just dropped. And again, it could wipe out 5 days of gains in one day. So when I see it going straight up like that, you just ask the question: is trying to get that extra dollar? It's like the guy he's got like dollar bills. He's got a whole handful of dollar bills, right? And then he sees one on the ground, a dollar bill on the ground, and he reaches down to grab that extra dollar, and then he loses half the stash he's got. He loses like $50 that he's got that drops as a result of that. So greed, you got to control the greed. Is that extra dollar worth losing $3 or $4? Because that's probably what's going to happen when it reverses. It's going to drop quickly, and that extra gain, that whole week of extra gains that you got, you waited all week and you gave it back. You gave it right back because you're too greedy. So just recognize that these parabolic moves, number one, you don't buy into them because they drop. When they drop, they tend to come back quickly, but you also want to look to start taking profit somewhere in there. And it ended up being perfect in my book. It ended up being perfect with getting out of those oil stocks in the portfolio. I kind of timed that pretty good. And then here's the dollar. Again, the dollar parabolic move. It's come back sharp. It's up again here. And that's a good sign that the dollar is moving back up. Oil's continue to go lower. You're seeing a little bit of that inverse relationship. Not much. It's only a day, but that's a healthier market when you're seeing these moving in the opposite direction. So, and then again, you can see the elevated VIX. Chip stocks too. Again, there's a little bit of a support area right here. I'd like to see it get above that. It's kind of in that no man's land as well. All right. Oh, Bitcoin I thought this was breaking out. It looked like it had a big up day, one of the biggest up days in a while. And again, there was news tied to that. It was, the U.S. the president is asking the Federal Reserve to look into cryptocurrencies, or to possibly even create their own cryptocurrency or something like that. And I thought there'd be at least a few days of a rally off of that, but it reversed right back down again today, and a lot of head fakes going on right now in the market. It's a very, very dangerous place to be right now, for bulls and bears, for that matter. Question, maybe buy a put at the top of one of those spikes. Well, that's a good question, and I've tried that. But the problem is sometimes it can stay in that parabolic move for a little while. And if you're buying or it can start moving sideways. It doesn't have to come all the way down as fast as it goes up. Sometimes it'll just move sideways, and that'll kill an option trade too. So you could buy a put. Sometimes if you get a bearish reversal on a parabolic candle, or a stock that's moving straight up, and you get a bearish reversal candle, you can buy a put on that. You probably want to give yourself a little bit of time, but just realize that if you think that's going to give you a guaranteed trade, it always seems like the ones I try to buy puts on, the overbought rally continues for another 2 weeks, and it becomes even more outrageous. It goes higher, even goes even further to the upside, yeah, that could be something you could look for to buy puts on a. But I'd kind of make sure you have like a bearish reversal candle or something like that. All right. So let's get into some stocks. The area, the one that is in a nice bull market though, is aerospace and the defense contractors. I talked about this before. In fact, I said to kind of build a list of wait for some of these stocks to pull back a little bit. Some of them have pulled back. Now, some of them did go a little bit parabolic, so they could consolidate a little bit more. And so, I'm not suggesting that you'd want to take an aggressive trade, but if we go under the hold section, there's Raytheon RTX. It's only an 87 strength rank, but like I said, there's going to be a lot of stocks that have lower strength ranks just because of how much the market's been beat up the last few months. But this one had a nice little pullback here. It had the sharp spike. It's pulled back to the breakout area. What used to be resistance is now support. But you've got a nice uptrend here, higher highs, higher lows. It's acting like an uptrend. I think there's going to be demand for defense spending. Remember, the market is always forward-looking, and you could say, well, Jerry, this doesn't make any sense. We're not in a war right now. Why would defense spending start going up? Well, first of all, we're not the only. The U.S. isn't the only one buying defense stuff from these defense contractors. They sell to other countries as well. But if anything, what this whole war thing has shown us is, just how quickly it can happen. And if you're not prepared, you don't have the equipment. I mean, what is Ukraine suffering from right now? They don't have the equipment to compete with Russia. So, it's forcing the U.S. to look at its own capabilities, and so I think naturally it's just going to lead to more defense spending. I could be wrong, and this is something I tell everyone in these classes. If you're looking for someone to give you good fundamental reasons for owning a stock, I have my own opinions on fundamental reasons, like this one. I mean, that just seems to make sense. That I see something happen, and I think, well, go back a few months. What did I say when the whole Russia-Ukraine thing was just kind of, when they were building the Russia was putting their army on the border of Ukraine. I said, I'm not an expert in this, but I can't see a country spending all that money to put their whole army on the border of another country just to say, okay, we're done. We were just joking, or we were just bluffing. We're going to turn around and come back. I mean, it just doesn't make sense to me with my simple mind. And then I thought, okay, well, what's going to go up? What stocks are going to go up based on that? And it's always oil stocks. Any type of major conflict is going to cause oil to spike. It always has. It can be temporary. It could be only a few days or so, but it almost always happens. So, but if you want to listen to me lecture on foreign relations and details of armed conflict, I'm not your guy. You want to talk baseball, man? I can talk baseball with anybody. I can hold my own. I'm a pretty good baseball expert. But the point I'm trying to make is I'm a chart person. I'm a technical analyst. So to be honest with you, I'm giving you reasons why I think that the defense industry is going to keep rallying. But if suddenly RTX starts doing this, I don't care what my reasons were. It's acting like a downtrend now, and that's going to be my analysis. Is this stock is going down? I don't care what reason I gave you before. This is what's happening. So I'm not the person. I get asked all the time, "What's your opinion? Or what do you think of this event that happened and how it'll affect the market?" And I'll be like, I'll have an opinion sometimes if I have any knowledge of the situation at all, but what I all care about, I don't care what my opinion is. It's what is the chart doing? What's the chart telling me? Now, if the chart is telling me the same thing as my opinion, then great. But if it starts changing, I'm always going to go with the chart. The chart is what the price is what is actually happening, and that's all I care about, is trying to do whatever I can to follow what is actually going on. There's an old Wall Street saying that says you can either be right or you can make money. And not that you can't be right and make money, but the point of that phrase is that some people are more obsessed with being right, being able to brag to all their friends, "I told you this was going to happen. I told you that oil was going to spike," than they are with seeing the chart. And if the chart suddenly reverses, they're sitting back saying, I don't want to be wrong. And so they start grabbing for more reasons why they're still right, or they're going to be right. Well, just wait. It's just temporary. You can't pick the bottoms, or, it's going to eventually go up. So I don't care about all that stuff. So I'll give my opinions and I'll answer the questions the best I can, but I'm not the guy to get the best in-depth fundamental reasons. I am the guy to talk to if you want to know the chart reasons why a stock could go up or down. So just keep that in mind. The chart is really what's most important, and that's what we want to focus, at least for me, and that's what we're going to focus on. But the chart is saying this should go up. I like the story of why it could go up. This is one that you might want to put in your watch list. Okay, maybe wait for it to go back to a buy signal. Now, some of these other ones are I still think they're a little stretched for my comfort level. And some of them are still buys. So if we go into the buy section right here, and these are names I've talked about before, Northrop Grumman, NOC. See, it did pull back, but here's its breakout area, and so it's still a little ways away from that. I'd like to see it actually come down a little bit further, and maybe it will. But RTX, just to compare it, look at RTX, and you can see what I'm talking about. See, it's like I said, here was its breakout area. It's already pulled back to that, and you can see kind of a proportion in this. It rallied up, retraced about 50% of that move, rallied up, retraced about 50% of that move, rallied up. And where it reversed right here was about 50% of that rally up. It's just, there's a proportion to this uptrend that looks really good, in my opinion, that I like. But NOC is one you'd want to have a watch list. General Dynamics, these have higher strength ranks too, 91 strength rank. There again, really had, and you got to be careful too, because remember what creates that ABC pattern is you get the initial sell-off, and that initial sell-off it tracks the buy the dip buyers. They were waiting for that pullback, and so they immediately start buying that dip. Wave B is often referred to as a sucker's rally, because it's not done. The pullback's not done. It sucked in those initial dip buyers. They bought a little bit, but they're not strong enough. And then you get the flush out move that where all those buy the dip buyers get out, And then the real buyers, the more patient buyers get in, and then that's when it takes off. So anytime I see one drop like that, I don't want to be that sucker. I don't want to be buying it on a sucker's rally. Now, sometimes you do get just a one-day drop and it takes off again. That's why the ABC. Oh, even when you learn to recognize the ABC pattern. That sometimes that pullback. Sometimes it looks like the ABC pattern, and it rallies a little bit, and you get one more move down, and you get two suckers rallies in it, and then it takes off. It doesn't always. That's why I tend to have you focus more on the concept. You're gonna be buying in on a sucker's rally sometimes. I do it all the time, and I've been trading for 25 years. I've been recognizing ABC patterns for about 20 years. I still find myself getting drawn in a sucker's rally, and sometimes I miss a rally because it had just one drop and then it takes off again. I'm waiting for that wave C and it just keeps going. But that's why I don't like to buy in on this. This looks like, and especially too, look, it's paused the last couple of days. You get a pulse of down, then you get a pause. You're moving sideways. You're probably going to get another move down. But there again, in an industry like this, if there's more war news that freaks everyone out, then it could just reverse and go right back up again. Sometimes when they're in these really emotional trends that they don't pull back much. Lockheed Martin, LMT, and again, it hasn't pulled back that much. This could be maybe wave B, maybe wave C. But again, I'd want to keep these in my watch list, keep an eye on them. And you can see these are trending very strong. So again, the software is working. It's showing you stocks it's showing you a bull market. There's a bull market somewhere, but there again, you'd want to trade because it's only a segment. You'd want to trade it with just a small amount of capital. You wouldn't want to have all your money on. And although I did do that in the portfolio with oil, I did have all oil stocks or a big majority of oil stocks during that period. But I also had a management plan for it. So if they did reverse, or I was going to stop out of them, and I did stop out of them in some cases. I didn't make as much money on those oil trades as I could have. I got shaken out of a few of those trades, so, but that can happen that can always happen when you're in a bearish market condition and you're trying to trade bullish in a bearish market condition. I'm always going to be quick to look for any sort of bearish reversal signal and get out, and then really feel confident waiting and staying in. It's just the way I'm wired. All right, so those are aerospace. In the finance sector, I only really found one that jumped out. It was this value line, 96 strength rank, and just that it looks like it's consolidating here. I'd want it to break out. When you see these long sideways ranges, you actually wait for them to break out, because they can stay sideways like this for a while. But it looks like an uptrend it's held up when the market's pulled back in the last little bit. It's held up pretty well. I look for those type of signals with some stocks. That shows you that buyers are there. And then I did something that, sometimes if you get bored with seeing the same stocks and you're watching the same stocks, which we have, there's a lot of these that we're already watching or keeping an eye on. And it seems like, in these updates, I'm going over the same stocks over and over. Well, move down the list a little bit. Now, keep in mind, the concept here is what we're trying to do is focus on the strongest performing sectors, and then looking for the strongest stocks within those sectors, right? That understand that philosophy. That's the main philosophy. But again, there are times where, like I said, you're either already trading them or you're watching them, and what if you're looking for some new ideas or looking for something else? You can move down the list. It's not that you have to ignore all these down here, okay? And sometimes when I start looking down here, I'll have someone that types me a comment, well, aren't we supposed to stay at the top of the list? Yeah, and I could stop class right now, and we're good, you know. But usually you're here because you're looking for some ideas, or you want to find some patterns, and it's not that you can't find good patterns. If you know what you're looking for, I'm telling you right now, if you train yourself in technical analysis, you get really good at reading price action and charts. You don't really need a software service. You can, and if you're like me, I love to look at I like to look at charts. People say, well, why do you look at 200 or 300 charts a day? Why don't you just use some sort of scan? Because I love to do it, because it makes me feel like I'm seeing everything, you know. I'm not missing anything. Sometimes with scans, I don't know what the scan is leaving out. There could be a great company, and it missed the cutoff by one number or something like that. It was an 89 strength rank, but had the best pattern of everything. and I always I hate feeling like I might be missing something. And so now I don't have to look at a chart very long. I can recognize a strong trend within about 2 seconds. So to go through 200 or 300 stocks is nothing. It takes me a half hour or something, you know. So it's not like it takes a lot of time, but if I, you know, sometimes it's nice to go down here and look at some of these stocks that are down. I went into the medical sector. I've been in the medical sector for a while because it's been pretty low, and I found some pretty decent patterns in here with pretty good strength ranks. This SRTS right here, 98 strength rank. I have to double check because some of these are might be trading over the counter. No, this is trading on the NASDAQ, so that's good. But again, nice uptrend here. A nice move up, consolidated through here, broke out. Now it's looks like it's kind of pulled back right into here, and it's pulled back to that previous breakout area. So here was the ceiling, and it punched through the ceiling, and now that ceiling became the floor. I mean, this is a nice looking trend. And this is one that you can manage pretty well too, you know, because you can clearly identify where the floor is. Put your stop down below here. It's a pretty tight stop, but if this does come back down and end up going lower, you stop yourself out, or you know, you can put a stop down into here if you want a wider stop. But that pattern looked pretty good. This where is it? BCTX right here, 97 strength rank. Yeah, I have to keep double checking to make sure. Sometimes I'll miss it, because when it's OTC, over the counter, you might not even be able to trade it through your broker. It's trading on the over the counter exchange. Usually it's a very small company, and yeah, I don't know. You just don't want to mess around with some of those companies. Yeah, everyone wants to pick the next Microsoft and buy it at 20 cents and have it go to $1,000. But if you saw the number of 20-cent stocks that went bankrupt compared to the ones that made it, it would shock you to where you probably never buy penny stocks again. But here's a nice one right here where you have this dip, it's pulled back. Now, whenever I see this, I want to look at a little bit bigger context just to make sure that this thing has been moving sideways for 2 years or something like that. Well, actually, I like what I see right here. So you have this big run up. You have a big kind of ABC pullback right through here. And then you've got impulsive down, you've got impulsive up, and then this looks corrective. This is exactly what I like to see as a potential reversal from a downtrend into an uptrend. Now, again, there's no guarantee this is going to go up, but it looks like it's starting to move up the right side of that bowl. And, you know, it's what I'd expect is a thing that should start stair-stepping up. Whether it does or not, I don't know. Now, it did go to a buy signal today, but, you know, with the market the way it is, you could just wait till the market, that S&P breaks out above that area I showed you. you don't have to necessarily buy on the buy signal. I mean, that's part of the process we teach because it's simple. But you could wait for it to break out above here. You could wait for the market to break out, and maybe this is up a little bit further when the market finally breaks out. But you'd have a little bit of that market momentum behind you as well. All right. Another one here. Actually, another two. CPRX right here, 97 strength rank. A nice bullish move right here, and then it's consolidating. It's kind of moving a little bit sideways, and it's consolidating right after that breakout right there. So you want that area to hold. And you probably want to break out of the sideways move. So, if it can break out of that, get the market behind it. That's a nice little pattern there. And then one last one. This IRMD 95 strength rank. And again, you got this kind of V-shaped move. So here's a big pullback right here. Had an impulsive move up that broke out, and then you kind of pull back a little bit more sideways through here. And you got a little bit of a inverse head and shoulders pattern maybe developing. This one I'd probably want some confirmation on though. Get back up above here. At least look like it's breaking out again. Because it could come, if this is an ABC, it still could come down into here a little bit, come down a little bit deeper. So you definitely want confirmation on this one, but nice little pattern developing there. All right, that's all I have. And like I said, there's portfolios empty right now, all cash available. When we start to see some movement in the market in our favor there, we'll start getting into some more stocks. There was a question on TTEN. Let me see if I can't remember what the question was. Just a second. Yeah, it's in an uptrend. The question was about the candle. Yeah, it has a bullish candle today. Yeah, I mean, the trend is still up. I don't see anything in there that would suggest getting out. So I wouldn't enter a trade at this point in here. I think it's a little bit stretched. Not much of a pullback right here, and with the market conditions the way they're looking. But if you're already in a trade, it's still acting like it wants to go up. So is it worth considering the beta? I don't usually. I don't care too much about beta. Usually, I don't really focus on. That's too complex for me. If you're a mathematician guy, it's like I trade options, and there are some basic things you have to be aware with options, with the option pricing. But I'll tell you, I don't get that extreme with some of that analysis. I use simpler analysis in analyzing my option trades, because the biggest thing is if you get the move right and you get the time right, it doesn't matter. It doesn't matter if you buy an expensive option. You get the move right, you get the time right, you're still going to make money. maybe you don't make as much money because the option is inflated a little bit and then deflates. But I'm telling you, you can complicate all this stuff. And now some people like that. Some people, they're engineers. They want the mathematics. They crave the mathematics. They obsess about the mathematics. It's what is their enjoyment of being in the markets. If that's the case, yeah, do it, because that's part of your enjoyment, is analyzing that stuff, running all the numbers. I'm not your guy. I'm the guy that's next to you with the crayons drawing farm animals. Okay, I want it simple. That's why all these chart things. That's why I give these charts funny names and little funny things, because it's like I have to simplify it for my kindergarten mind to understand it. But it should give all of you hope that if you're not smart, and if you're not a genius, and if you like to draw farm animals with crayons, you can make money in the markets. You can do this. I'm living proof that you can do this. But yeah, there's a lot of the stuff that I'm aware of, but I don't pay much attention to it. And so, yeah, like I said, if that's something you want to add into your analysis, you can. But yeah, I'm not the one to be able to teach you much on that stuff. But I'll tell you what, with a lot of that stuff too, you can Google nowadays, and there's lots of free stuff out there that will. But I do want to come back to their basic things. But here's my opinion on some of that stuff. And this is why I can save you a lot of time, unless you don't want me to, because it's part of what you love about the markets. Then do it. But there's nothing you can analyze that can tell you exactly what the market's going to do. Nothing. That's going to perfectly tell you what the market's going to do. You have to remember that, because otherwise you're going to go from guru to guru and software program and software program. You're seeking it. You're going to spend thousands of dollars trying to find it. And I'm telling you right now, it doesn't exist. You have to master the fundamentals and just embrace the uncertainty. We're not going to get a mathematical formula that's going to tell us what the market is going to do. We have to just analyze the probabilities and manage the probabilities. When people ask me what's trading all about, I say that's it. It's analyzing the probabilities, making sure there's a lot of probabilities in your favor for that stock to go up or the market to go up, and that's what we do every week. We analyze those probabilities. I teach you those probabilities. And then you've got to manage those probabilities as you're managing your trades. You have to have a trading plan, stop loss, exit strategy, allocation strategy, all that kind of stuff has to be part of it. And there is a point where you can overanalyze, where they call it the paralysis of analysis, where you're looking at so many different things. Pretty soon you start seeing conflicting things. Well, this signal says it's going to go up. This signal says it's going to go down. Well, wait a second. What do I do? Well, if you're looking for something to tell you it's going to go up or go down, that's the problem. It's not. That's why I'll look at moving averages. I'll look at MACD indicators sometimes, and stochastics and all these other things. I know how they work. But that was part of the problem is early in my trading career, I studied all those things. I tried to apply them all, and then I found that some of them were conflicting. And then I was like, well, I just spent an hour analyzing the stock, and I still feel like I have no clue where it's going to go. And then that's when I started to just eliminate things. I said, let's just get, what is the basics? What's the most important thing? Where is it trending? Where's the stair step? That stair step analysis, you get that stuff down. It is how to recognize impulsive and corrective moves, and these, get impulsive move up, impulsive move down, and now it's going corrective. I teach it to you in these updates. I'm telling you, There's trainings on them. If you go to go to YouTube and go to the Traders Pro channel, there's trainings on all this stuff. But the stair-step analysis and then candlestick analysis, if that's all you mastered, you will outperform the trader that adds 50 other things to it. He's got to know what the MACD is telling him and what it did the 5-day moving average cross the 10-day moving average. Now, again, if you love that other stuff too, and it's just part of, you want to add it in because you just like it, or maybe it gives you a little bit more confidence in whatever your system is, then go for it. But these basics that I really just harp on over and over again in these classes are far more important. Identifying the key areas, the support resistance areas on the S&P. That analysis we did in the first part of the update, being able to recognize that's a key area right there. We got to get above that area. This candle is a key area right here. If it gets below that candle, that's going to be bad. This is no man's land. I don't know what it's going to do in the next day or two. Being able to identify that is far more important than, what the moving average is, or there's a moving average crossover or whatever. So anyway, that's my opinion. I didn't mean to get on my soapbox, but I'm telling you, I don't know. I think if knowledge is valuable, so I think everyone should know what a MACD indicator is, and there's moving averages are, and whatever else you can learn, how to apply beta to your analysis, but to believe that's the most important part. No, there's far more important analysis to do that'll have more of an impact on your results than that. All right. Sorry, I was actually thinking we'd end class a little bit early today, but and I don't even remember what got me off on that tangent there. But anyway, have a great weekend. We'll see you on Tuesday for the next market update. Now, if there's anything else I didn't get to today, just email me the question. I'll be happy to answer it during the week. All right, everyone. Bye now.